Let's go across to Jayant Pai of PPFAS Asset Management, and he's here to answer all our personal finance query. Jayant, we have so far heard that, the advantages of investing via the systematic investment plan or the SIP. But is there any flip side to investing via SIPs, and when should one consider an SIP?
Hi Rima. Actually, I think people are disillusioned with SIPs partly because of the way they have been marketed. They have been marketed as a panacea for all investment evils, but that's not the case. An SIP is simply a way of channelizing your money in a disciplined way and keeping emotions out of the way or out of the investment process. So for instance, today the market is up by around 2%. So a person using his or her discretion may stay away from today's market feeling that it has gone up a lot. But if you have an SIP program running, your money will anyway be deployed today. So that's an autopilot mode of investing. But it's not a way of guaranteeing against losses. People have been marketing it as that. So that's why investors are disillusioned. And also SIP is not limited to mutual funds. Even a simple recurring deposit is a form of an SIP. So I would suggest that people just go in for it just as a disciplined way of investing and not as an elixir, which will solve all their investment evils or guarantee against losses.
And why do you not recommend SIPs in individual stocks? Your comment was running as you speak, and it says that you shouldn't think of SIPs for individual stocks.
Yeah, sure. Because individual stocks can go to zero, but a mutual fund is a collection of stocks. So simply because of that, it's very unlikely that the NAV of a fund can go to zero. Right. But we have seen several real estate and other infra stocks, which can go to zero. Fair
enough. So there you look at the fundamentals very closely. Point taken. Jayant, we now have a caller. Of the person calling is Ramesh Apte. He calls from Mumbai. Ramesh ji, go ahead. What's your question?
Hello, ma'am.
Yes.
Ma'am, since 2008, markets have been volatile.
Yeah.
Should I consider an SIP investment? And which are the good schemes which I can invest in via SIP?
Can you tell us exactly for what goal you want to invest, or how much you want to invest, or what is your time period? Because all suggestions of what funds you should go into will depend on that. So your time period?
Yeah. Now it would be 3,000 per month over a period of 7 to 8 years.
All right, fine. 7 to 8 years. Jayant, line is not very clear, but 7 to 8 years. And his second question is, should there be a part investment in gold?
Yeah, sure. Markets will always remain volatile. So an SIP is a good way of participating in the markets without really spending time on researching individual stocks yourself. So I guess you should go in for it. If you have not invested in funds earlier, I suggest you begin with a couple of good large cap equity funds. A few of them are, say, HDFC Sensex Plus or Franklin Blue Chip, DSP Top 100. There are a slew of good funds, but you have to choose properly. And also, I would not like to comment on whether gold is a good investment at this current point in time, simply because I don't want to speculate on prices. But sure, a small strategic allocation to gold is always recommended.
Jayant, if he wants to invest only 3,000 per month, should he put it in one fund itself? Because you've recommended about 2 to 3 funds. Or should he diversify even 3,000 per month?
No, I think 3,000 is not a very big amount. And one fund could do the trick. So I would suggest an HDFC, an Index Plus fund is a good option.
Fair enough. Ramesh, Jayant, we have to wind up the discussion on that note. Thanks a lot for joining us, Jayant, with that useful advice on SIPs in stocks and in mutual funds. We take a break on that note. We'll come back and a market expert joins us, Vikas Khemani of Edelweiss.